One of the reasons you're here, I guess, Stephanie Link, is because from the April lows, and that's the close on April 19th, technology is the best performing sector. It's up 12.5%, right? Just as people were trying to write it off. And when they were writing off stocks like Apple, best days are behind it, no innovation, revenue growth is dead, late on AI, et cetera, et cetera. Stock's up today. It's, we'll call it 190 because that's where the comeback has taken it to. And you bought more of it, and that's what I was getting to. That's our headline, is that you're more overweight, your biggest position now overall as Apple. Tell us.
Yeah, it's about 7.5% in terms of my portfolio. The S&P 500 weighting is about 6.5%. So it's a very big position for me. The stock has lagged, as you mentioned. It's actually, even though it's had a nice little bounce, it's still down 5% from its highs. And I think we know all of the negative stuff out there in terms of top line being sluggish and China being a problem. I think, though, that the services business is just a juggernaut. And what is exciting is that it is now 26% of total revenues, up from 16% sequentially. And it's growing 14, 15%. And I think it's going to continue to grow double digits. I think also in the 10Q, when I was going through it, operating margins were up in every single region of the world other than China. That's very impressive. I've always thought that their gross margin story has been outstanding. Now they're doing things on the operating margin side, which also is equally as exciting to me. They're buying back a ton of stock. They raised the dividend. And you have WWDC in June. You have an iPhone 16 cycle coming up. We have a lot of AI to look forward to in terms of the new cycle. So I just wanted to make it bigger. It's not cheap, but it's cheaper than it has been historically by about 10 multiple points. And so I think there's some value here.
Yeah, Bill, I mean, it was that buyback, the record buyback that they announced, which seemed really to jumpstart this stock again. And if nothing else, reminded people of the engine that they have of the buybacks, because the mountain of money that they sit on, and all of this doesn't even take into account what may happen next month at WWDC, where we get more clarity on AI. Maybe some of this is front-running that. You tell me. You added to it a couple weeks ago.
We did. And was it $110 billion buyback? I mean, the stock is come back extremely well. I like buying things that are out of favor. I like this move by Steph and continue to add to it on her end. It's a slight bit underweight for us on against the S&P 500, but it's in our top 5 or top 6, where we are all heavy tech: Amazon, Alphabet, Micron, Nvidia, Synopsys, and Apple, all in there. And here's the thing about Apple is, they haven't spent as much on AI just yet. And Josh, you've said it before too, is Apple doesn't come first, but they come right. And I think there's some tailwinds that we haven't seen yet from Apple as they start to spend on AI. And then, when you talk about spending on AI, that's one of the things within these earnings. These companies who are cash cows are now investing in their future, and there really is this innovation to invest for, to drive the growth. And I think where we are right now is playing out.
Apple was in a 17% drawdown from its highs as recently as April 19th. And the narrative is this blue chip stock is about to go into its own individual bear market. I think the lesson here for investors is just to remember how quickly narratives can come and then how quickly they can fade away and go. It's only 4% from all-time highs now. Think about that turnaround in just sentiment. There's no fundamental change. Apple is still the worst performer year to date out of the top 10 market cap stocks, even with the recent rally. Out of the top 20, it's the 3rd worst performer year to date, only behind Tesla and J&J. It's negative 1% on the year. So if you think you missed it, you probably haven't. So I like what you did there, and I think it's going to work out for you.